following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, folks. This is Larry Pesavento setting in for John Logan. He's got an appointment with the physicians today. I guess he's not feeling too well. But today's a big anniversary date, folks. This is 14 years ago. Today is when we had 9/11, one of the saddest days in my trading career. I was on the phone with Arch Crawford just exactly as the first plane hit. He was talking with someone in the other building, Tower 2, and the guy told him, he said, "My God," he said, "a plane has just hit the building." And, you know, Sam told me, that's his nickname, Sam. He told me, he said, the planes hit the building. And I said, get out of here. And he said, yeah. So I had the news on. It was probably a good 5 minutes, maybe 10 minutes before the news services finally had it. And also, Arch knew that the Pentagon had been bombed a good 20 minutes before it happened. He had just had a good source for that. Yesterday, he called me to remind me of the fact that we were on the phone that time, and it was really sad for me because I had two of my favorite students were bond brokers for Boyd Jeffries in Tower 1, and the wife was sick that day, so she didn't come in. They're both bond traders, and so she didn't come in. But her husband, he lost his life, and there were two other people that I knew in the group of 2,800 that had passed away. But it was very, very sad. I just literally I was in a state of shock, and this is something. It's really very, very sad. But I don't know all the. It just changed our lives forever for traveling because, we got to go through all kinds of things that we never used to have to do. But that just changed our life. That's just one of the things that happens to us. So anyway, I posted a chart in here today for the just let me catch my breath here a minute. And we're setting on these next 20 days are some of the most exciting astrological days that we're going to see for several years, extending now from the 14th of Monday, which is the Hebrew cycle, Rosh Hashanah, and it goes on for 7 days into Yom Kippur, which ends on the 22nd, and we have a solar eclipse coming in on Monday, along with the new moon. In addition to that, we also have Mercury is going retrograde. And the last time Mercury went retrograde was on May the 19th when we had the full moon, the new moon, and it was also the high in the market was the high tick for that time. So it's really going to be interesting, really, really powerful stuff. All the way through to the 9th of October. Then it calms down a little bit. Now, the chart that I've posted in here, in the den here, shows the relationship between what happened and I don't know if a 1987 type of thing is going to happen or not. People are saying, well, when people were talking about a potential crash, it doesn't happen. That's baloney, because in 1987, that was happening. I was on TFNN excuse me. It was called FNN in Los Angeles. That's the one that's CNBC right now. FNN became CNBC, and I was on with Bill Griffith right before the 25th of August of that year, said that this is going to be a major high because we had 5 planets all in the sign of Leo. And oh my God, there were so many things happening that day that it was a really mind blower. And I told Bill that the market would be down, more than 300 points in one day, and the Dow was trading at around 2,600 at the time, which was a huge move. And the reason, how I figured that out was the previous move had been, I believe, 190 points, I believe. And if you multiply that times, 1.618, you're going to come out with 300. And of course, it opened down 300 to be down 500 on the day. Well, that made me a little bit famous for about 30 seconds. And but that's what happened, and that doesn't mean that it can't happen again. And I'm not sure that it's going to happen again, because one of the problems that you have in trading is your unfulfilled expectations. That's everything in your life, whether it's your children, your spouse, your broker, whatever it happens to be. If you expect something and it doesn't happen, that leads to frustration. So it's best to try to not expect anything, just react to it. So all I'm going to be doing is showing you the reactions of what I think is happening in the market. Now, we topped here, I believe, a 3-week cycle high yesterday. What day was it? It was Tuesday, Monday. Yeah, Tuesday, during the Tuesday holiday. That was the crest of a cycle. The reason why I believe that's a crest is because we hit a perfect 61% retracement from the high on May 19th on the Dow. We made a little bit better than 60% retracement on the NASDAQ, and we made a beautiful ABCD in the S&P, but the S&P cash did not take out the high of August the 27th. That was the rally off the bottom. So that's telling me that. Now that the German DAX did the same thing, it went exactly to a 382 and 50% of the previous highs. So all of that tells me that that could be, this was a high. Now, if we close really strong today, that means we'll probably be topping on Monday, or we should have a really strong move starting Monday. Whether it's going to be up or down remains to be seen, but it should be a strong move, and it should last about 7 or 8 days from the 14th, into the 27th, which will be the in fact, we cross the equinox on the 21st. We start fall, and then on the 27th we have the lunar eclipse. And it's also a super full moon, because the moon is going to be at apogee at that time. It's going to be as far away from the Earth. And those are the kinds that apogee is when you usually see a lot of earthquake type stuff. Now, the chart that you see in here is from Victoria Martin. She's my personal astrologer in Chicago, and I've known her for, ever since Moses and I went to school together. But you'll notice that in 1987, we had a very similar situation. The solar eclipse occurred right around the 25th of September, where we bottomed. We rallied really strongly into October the 2nd. That was October the 6th, October the 6th. And we had a really big Venus-Uranus aspect that day. It was a conjunction. There were a couple other things happening at that point. And I had been holding October puts, and they expired on the 16th. So I had 10 days to go. They were in the money, and then the market started down strongly the following Monday, and it went down, just straight down into Friday, October the 16th. And that's when options expired, and I was absolutely ecstatic. Dow was down 106 points, and I had covered all of my put options, and I was able to cover a couple of years schooling from my daughter, who was going to go to Harvard, and so I was about as happy as a pig could be. And I was just feeling really great until Monday morning, when I could have bought Harvard. Well, it wasn't quite that good, but it would have been 10 times better than I had hoped. But the problem was that you couldn't have gotten filled down there, because there was just no market makers just doing anything. Everybody was so shell-shocked that there was no market. The market had basically had shut down. And, we were down all day, down 550 points. The next day, the market did open. It opened slightly lower. But overnight, the plunge protection team, they didn't have that name at the time, but it was basically Greenspan, Rubin, and Larry Summers came out with this idea that we're going to let the banks mark to market, what their inventories are. In other words, if they owned, a million or say 2 million shares of IBM at 140, and it was trading at 100, they could put it on the books at 100 instead of 140. And that's what basically turned the market, was that decision that the Fed came in and allowed the banks to, mark to the market. That means the banks were no longer, under siege. And so there was your first event of too big to fail. And that's what, turned the market. And it really, the whole day of the 20th was wild. I mean, folks, the spreads that we had during that time, for give me an example, we have the S&P trading at roughly, say, 1945 right now. Back in those days, the bid would have been at 1880, and the offer would have been at 1995. That's how big the spreads were. Here we have a spread of a quarter point. These spreads were 50 to 100 points, and this is when the S&P was trading with a multiple of $500 instead of $50. So there was a huge difference, during that time. We don't want to go through something like that again. That was the most scared I've ever been in all of my years in trading, and that's been 55 years. That's the scaredest I've ever been, and I was on the right side of the market. God help anybody that could have been on the wrong side of it. However, if you went back and looked at history, you look at that long-term chart, and that's just a little blip on the chart. You could hardly see it. And the low that we made that very next morning, it was slightly lower, not by much, but that was an exact low from the 1982 low. It was exactly 0.618 to the low in 1987. And from there, we went up to go to 18,000. So that's what we're looking at when we're watching, some of these things. Now, there's been a lot of talk recently on the internet and stuff about this Shemitah cycle of the Hebrew cycle, which is 7 years. What I'm looking at is not really related to what I'm looking at here. I'm basically looking at this 3-drive expanding triangle pattern that's been going on since 2000. 2007 was the secondary high, and I believe 2015. That's the big one that we're looking at. Now, whether this is going to be very active or not, I'm not really sure. This is where you get into trouble when you start thinking about expectations in the market. And believe me, expectations are, you expect something and it doesn't happen, you just don't feel good. And if it does happen, then you've got something going for it. We're going to take a little break here, I believe, and then we will be right back after these few words.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I'm going to the real problem that we see here in the economy is not the stock market. It's the bond market. I believe there are 3 segments that we have to really focus on just for financial survival. The first, and I think is the most important, is the debt market, which is our bond market. I'm talking about all bonds, not just treasuries and notes. I'm talking about the corporate bonds and also the junk bonds, and these are many, many times bigger than the stock market, and that's true all across the globe. And the second part that we have to worry about is the derivative market, and these are the things that are unregulated. Senator Warren, Elizabeth Warren out of Massachusetts, tried to when she was running the SEC, tried to implement some of these things, but she was overridden again by Larry Summers and Rubin and Greenspan and Volcker, and well, that wasn't Volcker, Greenspan and Bernanke, and so these are unregulated, and there's supposedly there's 1 quadrillion of derivatives. I don't know if that's a correct figure or not, because they don't know, but a quadrillion is a trillion. That's so many zeros that you can't even comprehend, how big that is. And the problem that you have with this is the other side of the trade, counterparty risk, and this is what broke long-term long-term capital, back in 1995. They had those 3 Nobel Prize winning economists, and they had the Holy Grail. They were making money hand over fist, except when they tried to get out of the positions, they were unable to do it. And I don't know if this is going to be the case or not, but when you have this much going on, it's really crazy. When I started trading, way back in the early 60s, my first trade was 59, but early 60s is when I really started to get into it. We only had about 25 commodities that we traded, maybe 30 at the most. Some of them were not even very liquid, but now we've got thousands and thousands, and we have derivatives on those. And so that's where I see, the second part of this, because the Fed has been pumping money in with their experimental quantitative easing now. It's been going on for 6 years, I guess. It's been 9 years, I believe, since we've had a interest rate increase. So that itself will be interesting. Everybody keeps talking about that, but I don't think it'll be much of an event because the markets have already discounted interest rate raise, very, very easily, without any trouble. So that's it. That's what I'm saying. We'll take a look at the overall market right now. As I'll take a look here at the. I want to give you a second here to blow this up so I can see it a little bit better for you folks. I want to show you what the breadth of the market, and just give me 1 second here, and I can put it up here. There we go. And as you can see, the advanced decline line is still even, and we've been in a 3-week rally in stocks ever since the 24th when we had the 1,100 point down move. We've basically been in a 3-week rally that has gone sideways. And as you can see, we're still making more new lows than new highs in the stock market, which tells you there's not a whole lot of interest in buying stocks at this particular time, and that could change. Maybe it's all going to change today or tomorrow. You'll have to wait and see. But I'm going to walk you through some of these charts that have happened since the time of December, August the 25th, which happened to be the anniversary date of the high from August 25th of 1987, which in itself means something quite a bit if you're a Gann follower, because he really believes strongly in dates. As you can see here on the NASDAQ on 2 days ago, we hit the almost perfect 61% retracement of the whole move down. That was a big ABCD pattern, as you can see by this little parallel equilateral triangles that I've put in here, also known as a butterfly. And so, and all we've done today now is we've just backed off to a 61% retracement of the low that we made yesterday. So we're still in basically an uptrend, and we could certainly, continue to be strong and go a lot higher. But that's just one. That's been the strongest. That's been the NASDAQ. If we take a look at the Dow Jones Industrial, that's even more telling, in my opinion. Just give me a second here to get this in. There we go. There we go. And you'll see on the 9th during the holiday period there, we made a slightly higher high by 4 points in the Dow. We hit 16,684, and that took out the high from the 27th. That's not much. Okay, going to take a little break, and then we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar Sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted the chart of the the S&P E-mini in here, and you can see we had the same situation where we did go up, and it was really amazing because the S&P in the September option, which is now we've rolled over to the December, but the September contract on the 8th, excuse me, let's make that the 9th, actually went up and matched the high from August the 27th. It didn't take it out. The cash index, the SPY cash, it missed it by quite a bit. It didn't get above the high. So there was a lot of things going out. The way I interpret this is the low came in on the 24th, so we basically have had a 3-week rally. And, you know, it's been a pretty strong rally because some of them made it to the 61% retracement. However, Asia, if we look at the Hang Seng Index and if we look at the Nikkei, you're looking at markets that are, you know, far, you know, weaker than where they are. Now, I've said several times that there's a possibility here that maybe the August 24th bottom was a bottom similar to what we had in 1987. I'm not sure that's the case, but the only way that will happen is I believe that we have to turn the commodity markets around, that's showing that there's some demand coming back in, and that we'll have to see, some increases in the transportation index to tell us that, we're starting to move goods again. But right now, the commodity index just keeps going lower and lower and lower, and I don't see any anything happening with that. When I do my show, I'm sitting in for John Logan this morning, but when I do my show at the top of the hour, I'm going to go over some of the commodities, that we've been following, and particularly crude oil, because I noticed this morning when I checked Bloomberg, they're talking about $10 oil again. And believe me, last time we saw $10 oil, I believe, was 1990. And that was, I think it hit 10.99 at that time. It was February. I was actually doing a seminar with Mark Douglas at the time when oil was trading just under $11 a barrel. And it went from there to 44. And then from 44, it went back to 15. And from 15, it went to 144. So to say that it's not volatile is not a good thing to do, because it is pretty volatile. It's making some type of a bottom here around 43, but I'm not sure it's going to hold yet. But no one else is either, so just wait and trade what you see, and not what you think. That's the real key, to be watching. Now, the next chart that I want to bring to your attention to show you the relationship, long-term relationship, this going back over the last 30 years. This is from my friend Todd Gordon, and Todd has been on, he's a regular on CNBC, but this is his chart going back showing the Treasury bonds and the S&P 500, and the correlations are, usually quite high. But you've noticed there that during the times of the late 70s, there was virtually no correlation at all, because the bonds kept going down. And the reason for that is we had inflation of around 8 or 9%, or even more, 10%, and that ended with Volcker coming in. It was the smartest thing that President Carter ever did. And in fact, I like Carter as a president anyway. But if you'll notice the time during the 2000 break that we had, where the market broke down from the tech bubble, we had a big divergence there between the bonds, whereas the S&P had continued going up and bonds had been coming down, for well over 8 months. That happened again during 2007 and 2008, and now we're in tandem with the bond market, but that doesn't mean that they're going to go in tandem. You have to look at each market separately, because bonds can go down with stocks, as we've seen on this chart several times. It doesn't happen too often, because money usually is searching for a place to go, but it can happen, so you've got to be careful. The long-term bond picture still looks pretty bleak to me, and whether it's going to reactivate itself or not, I'm not 100% sure, but you got to remember that that's one of the things that you have to be looking at. Now, I've been asked to share another chart that was given to us about from our friends at Elliott Wave, Robert Prechter. And his synopsis of what's happening in the market is the fact that we've made this big pattern near the 91-month high, and you notice there that it's 89 plus 2, which 89 is a Fibonacci number, so that means it's just off by 2 months. But when you're going back over 15 years, 2 months is a very, very small amount of difference, to be looking at with this. So that's what we're watching here with that. But this is expanding triangle that we're looking at here, with the high from 2000 down to 2003. That was after the 911. As you can see, that first, the third drive there, the middle drive was actually the 911. The market rallied 61%. retracement after 911 and then went down and made a lower low in 2002. So these events the cycles used to be able to run the markets, the natural cycles, but with quantitative easing, they've been shifted, and that's the main thing. So what they're looking at here is a price of around 990 is what they're looking at for a potential price in the S&P 500 on this move. Whether that's going to be the case or not, that remains to be seen. That's more than 1,000 points from where we are right now. So that's just his prediction, what he's looking at. And he's like everybody else, some people are right and some people are wrong, but there's a little bit about what happens with some of these things. The overall breadth of the market, folks, is really bad. That brings us to the third thing that we talked about. We talked about debt, and we talked about derivatives, and the last one, oh dear, debt, derivatives, and what is the last one? Oh, I'm having a little, it's debt, derivatives, and I can't remember the third thing. The three things that are really bothering the market: debt, derivatives, and, well, it'll come to me in a moment. I'm having a senior moment here, folks, so bear with me here. Deflation. Thank you very much, Mr. Z. I knew you would come in and always have my back. Yeah, deflation is the other thing, and we can see that for the last 18 months in the commodity markets, where we've had some of these things go to very, very low prices, and they haven't bounced very much. Copper's had one heck of a good move here. It's rallied a good, I think, 15% here in the last few weeks, which is very good from an oversold condition. And but some of the others, the gold and silver, have rallied very, very modestly, to say the least. So we'll see what is going on. Okay. All right, now we want to look at one other thing, and that's the long-term cycles that we've had in the market. This is a different way of looking at the chart that Elliott Wave furnished to us, because this one is basically showing the market going back over a little bit longer time frame, but you can see the three patterns that are there. But if you'll notice that those dark gray boxes there is where the market actually took out the previous lows. And that was a start of, a big move down. And we did it this year already. And the interesting part here is we did it faster this year than any other year, and we did it more dramatically than any other year because of the move that we had down during the month of August, with stocks down 6.5%, was the biggest move that we've had in I think since 29. I'm not sure exactly, but it's certainly, we beat the years of 2000, 2007. So it had to be something of a record breaker on the downside. And what we've done now is, over the past 3 weeks, we've rallied up to a 61% retracement of these moves, and we'll see if this is going to be the case. Folks, I don't know exactly what's going to happen these next few weeks, but nobody else does either. All I know is that I've studied a lot of these cycles over the years, and we are really over some really major inflection points in the market, starting on Monday, when we have Mercury being retrograde, and we also have the new moon and solar eclipse at that time. We have the Rosh Hashanah cycle. That's the Hebrew cycle. For those of you that don't know that cycle, it's supposed to be you sell on Rosh Hashanah and buy on Yom Kippur, and that comes right out of the Hebrew Bible. When I worked at Drexel Burnham Lambert, there were 23 brokers in the area that I was in on the ground floor there at Wilshire and Rodeo. We had 21 Jewish brokers, and myself. Jim Twentyman came about a year later, and Adora Chan, who was Chinese. So there were only 2 people in the floor there that were non-Jews. And believe me, it was the best year of all the fun that I've had in this business. And believe me, I've had a lot of fun. Nothing beats my years at Drexel Burnham Lambert, folks. That was the best. I mean, I had it was just a piece of cake. First of all, I was bullish gold and silver, and they kept going up all during the time I was there, from 76 bucks, through 1982. I got out of the gold in 1980, but that was really a fun time for me and met some wonderful people. But two of the brokers in the office were rabbis that actually worked in the LA prison system. They took care of the convicts, as a chaplain for the the county and also the city. And so it was interesting, some of the stories that we heard about that. But the most fun part about it was after I was there about 3 months, they had a glass door into my office. And so on the glass door, it had my name and my title and stuff, and underneath in parentheses with quotes in really, really big gold letters was the saying "Resident Goya." And for those of you that are not familiar with the Hebrew language, Goya means a non-Jew, and we had so many Jewish clients would come through there and see that sign, and every time somebody saw that sign, they would laugh. When I left Drexel, I tried to buy that door. They wouldn't sell it. They wouldn't give it to me. I was thinking about going in using a light-fingered discount, but I really would have loved to have had that door. I guess I could have had it reproduced. It wouldn't have been the same thing, but that was really a lot of fun. Almost every day while I was there, I had somebody famous in my office, and the most regular visitor was, of course, Tig Andrews from the Mod Squad, and he usually had his best friend, Mike Connors, who was the star of Mannix, sometimes Chuck Connors. They were no related at all, but he was the rifleman, and he would come in, and it was he just lived right around the corner from the office, so it was always very exciting times, and I had a lot of sports figures as my customers. I had several Hall of Fame baseball players as my customers, which was fun. And Don Sutton, who won 300 games for the Dodgers and won several World Series for them, was actually a family friend, and it was a lot of fun, as was Tommy John, who I grew up with in Terre Haute, Indiana, who played in the majors for 28 years and was with the Dodgers from 77 through 81, which was really fun for our family because we got to go into the dugout and all that stuff. Anyway, I'm trying to kill a little time here because I got to do 2 shows at once today, so that'll be interesting. Hopefully, we won't have to do the 24/7 stuff for very much longer. Maybe the markets will slow down a little bit, but I don't think they're going to slow down over the next few weeks. My guess is they're probably going to stay even more active than they are now, at least through October, and then we'll see what's going to happen. If we do have a big down move, the worst thing that can happen is it's just a really sharp bear market and not a crash. A crash happens, it's over in 2 days, and people pick themselves up and that's it. But the worst thing that can happen is just a really vicious bear market, like what happened in some of these other markets, like 1974, where the market dropped in half, from July of 74. I mean, it was down a little bit, but from July through October, I mean, I think that was the October crash, and that's the one that gave me the lesson, my first great lesson in trading, and that is you don't want to buy things when they go down because they can go lower. But that's the worst thing that can happen, is that type of a bear market, because they're not prepared for that. We haven't had one of those in a very, very long time. The most we've had down is from 2000 to 2003, we had a 3-year bear market. We had a 18-month bear market in 2009. So this one, when it comes, should be about 5 years. That's what I would guess, because it's got to be it's been the biggest move up, so it's got to be the biggest correction down and take longer in time to do it, if that's the case. And that would be a good thing, because we really have overvalued ourselves with some of these things. And I want to go into that right after we take this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex.
Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, we're back, folks, and the last chart that I'm going to post in here was furnished to me by one of our good friends, Mr. RK, and basically it's from the Deutsche Bank, and it's going back several hundred years to show that, what the valuations are, in some of these markets with assets. And as you can see, they're saying that we are up in a higher area. And not everyone is involved with some of these high asset things. I mean, if you look at the price of real estate, in London and in Hong Kong. In Hong Kong, a few months ago, a 3,000 square foot home on Victoria Peak, which is by far the nicest place to live in all of Hong Kong. It's a top of the peak, overlooking China and the South China Seas. That house was 3,000 square feet. It had a pool, a tennis court, 3-car garage, and it sold for $66 million, folks. That's $20,000 a square foot. And it was sold in cash in renminbi, Chinese yuan, to a Chinese gentleman. But and then there's places, and you look at the $100 million places in Manhattan and the Hamptons and places like that. So there's a lot of overevaluation in some of these things. I mean, you can look at automobiles. You have a Tesla now that's $150,000, and Ferraris that are $1 million, and Bugattis, and jewelry and other stuff like that. So there's some evaluation, but the normal person he's not hooked up into that evaluation that much. Keep in mind, folks, the number of 1830. That was the low we made on August 24th in the stock market. If we go below that, and believe me, folks, we're only 100 handles away, so we could cover that, very, very quickly. And if we go below that, the next level we're looking at is 1550. So if that happens, now remember, we got to 2130, we came down to 1830, we dropped 300 points, and then we rallied up to 61% retracement, which is normal over a 3-week period. So if this next few weeks the market turns down, then just be careful. Don't expose yourself to too much. I know that people are value buying and stuff like that, and that certainly could be the case, but you want to do that. The other thing is, don't do what I do. Don't stay up all night. You can't, when you're in your 70s, you shouldn't stay up all night, but I don't sleep very well, and I do like to trade. The problem was this week I made 5 errors, 4 of them in my favor, 1 of them against me, a small amount, thank goodness. I caught it a little bit late, but it could have been really bad if I had had waited a little bit longer. But you've got to be, try to get well rested and get, as much sleep as you possibly can. I take naps and stuff, so but it does help. But you've got to be able to really stress, keep the stress level down as much as you can. So, but those are important things. But these next few weeks are going to be rocking and rolling, baby. Yeah. When you get to be 100, I won't have to worry to sleep. My old grandpa said, the main thing you want to do in life is stay away from open graves and never read the second edition of the obituaries in the afternoon. So I try not to do that either way. I'm actually in relatively good health considering, and so it's been a lot of fun here. But I enjoy the show here at TFNN because I've met so many friends here that really is a great environment for folks, and some really smart people are in this room, folks, let me tell you. And those of you that are in the room know that they're there, but there's some really smart folks in here. But we want to watch that level 1830 in the S&P. That's the key one. And we'll be back later. I'll be doing the next show here in another 10 minutes. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.